if you are a crypto bull, you need to be looking at Coinbase. Now, Coinbase released earnings yesterday, and as you can see here, they missed their bottom line by 238% and missed their top line by 21%. And anyone that's been in the market today will have been eaten alive, because from a macro level, we missed the CPI estimates, and on top of that, bad earnings. It has completely tanked Coinbase. Now, don't get me wrong, their earnings were not so great, and what they were talking about didn't really fulfill me with that much confidence either. But if you are bull on crypto, or Bitcoin or Ethereum, which is, the two biggest coins inside the space, Coinbase is looking more and more attractive, and what we're going to do in this video is check them out from an intrinsic value point of view. And Coinbase is a profitable company. They do have free cash flow, so we're going to take a slightly different approach and look at the intrinsic value model from an earnings point of view, but also from a cash flow point of view as well. And you'll see that the value or intrinsic value of Coinbase is absolutely shocking. So make sure you like this video, comment and subscribe, because let's just get straight into it. But before we do, don't forget to get your 5 free stocks from Moomoo, from the Moomoo brokerage. Again, 0% commission. Just deposit $100. You can get up to 5 free stocks worth 3,500 each. So it's free money. Link is down below. It's also in the pinned comment down below. Make sure you check that one out. So if you guys are brand new, very quickly, the full concept of value investing is to understand what is the value of the underlying asset. And you can do that through a number of valuation models. And we'll be looking at two today: the earnings valuation and free cash flow valuation as well. And the aim is to work out what the fair value price is, and if we are underpriced, potentially look to purchase the company if we believe in the bullish thesis, or if we are holding the stock, maybe potentially looking at selling the underlying assets because it could be overpriced. So let's just have a look at Coinbase today, right? Before we look at the charts in terms of, intrinsic value. Today it's down 26.4%. That is absolutely mental. And the year to date, Coinbase is down 78.6%. Now, Bitcoin is, I think under 30,000 now. And again, full transparency, I am, dollar cost averaging into Bitcoin. I'm a Bitcoin bull. I'm putting a small amount in every single week. I don't even think about it. It just happens like clockwork behind the scenes. But I can't. I do like Coinbase. I do like them as a company. I think, they are the number one, crypto app brokerage, or whatever you want to call them, out there across, the UK and the US and, other mainland Europe countries. So you can't ignore their base. Yes, their comps are down year over year. They have some tough comps to beat. Yes, monthly users is down, or active users, because Bitcoin is tanking. But again, if you are long-term bullish on Bitcoin and you think it's going to get back to the 60,000 highs and 100,000, who do you think is going to be leading the line here? Coinbase. And Coinbase is getting absolutely hammered at the moment, and these values again cannot be ignored. So we're firstly going to look at the earnings valuation model using my OGT intrinsic value indicator. Again, it's absolutely free. Link is down below to go get that from TradingView. All you do is click on indicators, type in OGT, and you'll see all my scripts there, and you get the intrinsic value indicator there. And what it does, only works for companies that have positive earnings. If you've got negative earnings, it doesn't work. As you can see, the trading 12 months for Coinbase is 14.81. And you can see here my low assumption, my medium assumption, and my high assumption. It is literally just blown through all three of those in the past 3 weeks. And wait till I show you what assumptions I've actually put in. You can see it on the table on the right, but because the one of the main things in the model is looking at the annual growth rate over the next 5 years. I've put 0% growth, right? They're forecasting a higher than 0% growth. They're forecasting higher than 2% growth, right? But I'm just showing you how low earnings growth over the next 5 years that I'm putting in there. The next thing is my annual rate of return. If you watch my videos, right, I always put in 12.5% because I can invest in an ETF like an S&P 500 ETF and make over the long term 10% a year. Definitely not making 10% a year this year, sorry, but over the long term you average around 8 to 10%. And I go to 12.5% to give myself a bit of margin of safety in case, I've made a mistake with these annual assumptions, etc. But I've put 25% annual return inside here, right? So it's discounting back the year 5 earnings by 25% every single year. And then my year 5 multiple, again, on the low side, I've put a PE of 9. This is a growth company at the end of the day. Having a PE ratio of under 10 for, crypto brokerage, is very, very low. And even then, it's still it's gone below that. Where it closed at 53.72. My low assumption intrinsic value is 55.59, right? So that's just nuts, right? Let's just face it, that's just nuts, right? So then I thought, okay, let me have a look at it from a cash flow perspective. If they're positive on cash flow, we can then use the discounted cash flow model calculator on Guru Focus. And this is, again, absolutely free. If you type in Guru Focus, DCF, and the ticker symbol will be the first link when you search for it in Google. So we can see here that the trading 12 months, Coinbase does have a positive free cash flow. You can see it was negative in 2019, positive in 2020, and positive again in 2021. They said on the earnings call that they've got $9 billion inside the bank, to grow and invest and all those kind of good things. So they've got money, right? They can weather the storm. And what I've done here is, though, the way this kind of works is you can either pick an earnings model. I shouldn't have done that. I think I lose it. Do I? No, I keep it. Even with the earnings model, there's some silly numbers on there. But I'm looking at the free cash flow model. It takes the trading 12 months number. I've put a discount rate of 9%. Let's go to 12.5. Still green percent. I'm not going to add a book value to here, which will increase the price slightly. So I'm not even going to add their book value in. And what you do, very similar to the earnings model, is that you select your growth stage. So I've put my growth stage to be 5 years, and I've put a growth rate of minus 40%. So every single year, they are going to the number of years of gross debt EBITDA is the annual growth rate. So I'm saying that they are going to decline their free cash flow by 40% a year, right? And then for the next 5 years, I'm expecting 0% growth. Even when I do that, my fair value price is still above the current price of 53.72, right? Ridiculous, right? And I'll be honest, I'll be looking to sell puts on this if this drops into the 40s or 30s, because I should be buying it now, but I'm saving my cash for Meta, which I'm trying to go full in on. And I'll do a video on that, link it down below if you want to check that, if you want to analyze Meta. But this is looking so attractive at the moment. And again, I've got a lot of exposure into Hut Mining 8 and Riot, which has also tanked as well. I'm looking to, buy the dip on those ones to, again, sell more covered calls on those. And that's why I haven't really pulled the trigger yet on Coinbase. But again, if you are looking to get into the stock market or get some exposure to them, I wouldn't go buy it at 57. Right, it depends. If you're looking to, own 100 shares at least at a minimum, I will start selling puts at 50, 45, 40 even, because I think it could go even lower. And if it doesn't, you're just going to pick up the premium and make that money. I don't know what it's at after hours. What it says is there. After hours is down another 4.3%. So who knows what it's going to open at tomorrow. It's just with the macro stuff, it's a terrible market. But guys, have a look at it. Download the OGT intrinsic value indicator. Don't forget to get your 5 free stocks on the screen now on my other intrinsic value videos of other companies. If you want to have your ticker done, put the comment down below and I'll get a video done as soon as I can. Appreciate it.